So this is going to be the second video on the depreciation. In the first video, we learned the concepts related to the straight line method of depreciation, why depreciation is there, why it is required, and so things. And also we covered the numerical questions for the SLM, and also we covered the WDV method or reduced value of depreciation method along with the numerical problem. Now let's start the second part for the same. And if you have watched our first video and if you have liked the content, do give this video also a thumbs up, and do not forget to subscribe to our channel and press the bell notification icon so that you get updated whenever we upload the new videos. Now let's jump to the content section, and first thing that we are going to cover for this video, it's going to be related to the numerical question for the same. Now let's focus over here. A firm purchased a machinery for rupees 2 lakh. Salvage value is also given 20,000 over here. It is to be depreciated by 20% value, written down value method. What will be the depreciated value at the end of the third year, right? Now just pay attention toward it. We are provided with the machinery whose salvage value is also given, right? So we purchase the machinery for rupees 2 lakh, right? And the salvage value is 20,000. So the net value over which the depreciation is to be calculated is 1,20,000, right? And further, it is to be depreciated at 20% by the written down value method. So for the first year, second year, and third year, the depreciation is to be calculated. So I told you in the last video also about the two methods. One, it was a lengthy method, and the other one was the direct method so as to solve such questions, right? And what value we are basically figuring it, we have to figure it out. We are to calculate the depreciated value of the asset, right? That is quite easier. Now when the depreciation of 20% is charged every year, and you'll be left with 80% of the value every year, so it will be equal to what? 1,80,000, that is the present value, right? And multiplied by 80 divided by 100, multiplied by 80 divided by 100, and again multiplied by 80 divided by 100. So this will be the value that you'll be left with. So we can easily be solving this. I'll be also be showcasing you that how we can be using the lengthy method so as to solve the questions, but also pay attention toward it. So it is simply 1,80,000 multiplied by 0.8, multiplied by 0.8, and multiplied by zero point 0.8. It comes out to be 92,160. But this is not your answer, because we calculated the depreciation on what? We calculated the depreciation on the, by ignoring the salvage value. We are again to add the salvage value of 20,000 back to it. So it will be 92,160 plus 20,000 value, that is 112,160, which is very much near to this particular answer, that is 11200. Okay, so this is a very easy method that we are to use in the exams, but for the understanding purposes, let me just solve the question for you. So the first year, the depreciation will be 1,80,000 multiplied by 20%, that is equal to 36,000, right? And the net book value will be equal to 1,80,000 minus 36,000, that is equal to 1,44,000. 1,44,000. This is for the first year. For the second year, the depreciation is to be calculated on the reduced value, that is 1,44,000. So it is 144,000 multiplied by 20%. So if we multiply by 20%, what will be the answer? It is 28,800. Okay, so it is 1,44,000 minus 28,800, that is 115,200. Now we have to solve for the third year. So it is 115,200 multiplied by 20%, so equal to 23040. So it will be 115,200 minus 23040, that is the same, that is 92,160. And so as to get the original answer, you have to add the salvage value back to it, right? So the same way we can be solving it, but that was for basically your understanding purposes only. This one was for the understanding purposes, and in the exam you have to use this straightforward thing, right? Is that clear? Now Let's move to the another theory panel that's actually related to the accelerated depreciation. As I told you, it is very much required in certain industries that we want to charge the depreciation at a higher percentage in the initial years, and in later years we want to charge a lesser percentage, because in initial year there is heavy usage of the machinery, and definitely the depreciation must be charged accordingly in the first few years, not after that, right? So that is a scenario. So first case that we are going to discuss about it, it is related to the sum of years digit method. It is the sum of years digit method. Now in this scenario, the sum of years digit method, the depreciation is charged at a high rate in the first year, and later on in the coming years it will reduce, right? Now how we can be solving this particular thing? First of all, just make sure that sum of year digit method is basically involving some of the steps. Let's take the case that you are provided with the useful life of the asset. Let's just consider that the useful life of the asset is given to be 5 years, right? Now what will be the sum of years digit means? It means 5 plus 4 plus 3 plus 2 plus 1. That came out to be 5 plus 4 9, 9 plus 3 12, 12 plus 2 14 plus 1 15. So sum of years of digit came out to be 15 over here. Now how you are going to make the fraction for the first year? For the first year, the fraction will be 5 divided by 15, right? So this will be the fraction for the first year. And for the second year, the fraction will be 4 divided by 15, and so on, right? So the depreciation will be charged as such. Let's say case that the value of the particular asset, was rupees 1 lakh. So for the first year, the depreciation will be charged 5 divided by 15 multiplied by 1 lakh, right? Multiplied by 1 lakh. And for the second year, the depreciation will be charged for 4 by 15 multiplied by 1 lakh, right? Now let's solve the question. Let's solve it. So 5 divided by 15, and that basically multiplied by 1 lakh. So the first year, depreciation will be charged at 33,333, right? And for the second year, it will be charged at 4 lakh divided by 15, that is 26,667. You can be looking at the difference that for the first year, the depreciation was charged at a high rate, and for the second year, the depreciation is very much lower as compared to the first year, right? And gradually it will decrease, right? Gradually it will decrease, right? Now let's have a look at the question over here. Let's simply directly jump to the question, right? You can be easily be solving it. Let's have a look at the question. A machinery costing rupees 1 lakh has a useful life of 6 years. Salvage value is given to be 10,000. Calculate the depreciation for all the years using the sum of years digit method. Now, whensoever the residual value is given, you are to basically ignore the value. Now, not ignore the value, you have to basically minus the value from the book value so that you can calculate the depreciation, right? So, machinery was valuing rupees 1 lakh minus the salvage value is given to be 10,000. So, the amount upon which the depreciation is to be calculated is 90,000, right? And sum of years digit method is basically for 6 years, because the useful life is 6 years. So it is going to be 1 plus 2 plus 3 plus 4 plus 5 plus 6. The sum came out to be 21, sorry. So this will be the denominator. This will be the denominator, and the depreciation we can be calculating for the different years. First, second, third. I'm just writing it over here. You have to solve it at the earliest, and you should be mentioning the answers, right? Okay. So for the first year, the fraction will be equal to what? It will be equal to 6 divided by 21. It will be 6 divided by 21, then 5 divided by 21, then 4 divided by 21, 3 divided by 21, 2 divided by 21, and 1 divided by 21. Multiplied by the 90,000 upon which the depreciation is to be calculated. Very much easier. Just make sure numerator side will be descending. The numerator value will be descending, not ascending, right? So that higher percentage can be charged in the initial years and gradually it will reduce. Is that clear? Okay. Now let's solve these values. So the first value, or simply you can do for calculation purposes, let's solve 90,000 divided by 21. It is 4285.71. Okay. So we just solve the one particular value 4285.71. Now multiplied by 6. That is 25714, right? The second value came out to be 21428. I'll be just solving three values. The next one came out to be 17142. And so on. You can be calculating all the six values here, right? And the total depreciation which will be charged over the 6 years, it will be totally be equal to what? It will be equal to 90,000 only. If you sum add all the depreciation for all the years, na useful life, it will basically be up to 90,000, right? So that is about what? That is about the sum of years digit method. I hope that you must have understood this particular method. This is very much important, right? Now, let's continue with the another method of depreciation under the accelerated method of depreciations, which is actually equal to double declining balanced depreciation method. Double declining balanced depreciation method. Now, how the double declining depreciation method works? Now, in this particular case also, in the initial years or earlier years, the depreciation will be very much higher, right? Depreciation will be very much higher because these are the most productive years, right? And we have to make the maximum usage of the same. Let's say case that you buy a car, right? The largest amount of depreciation is to be charged in the first few years, and later on, this is not to be done, right? So the double declining method of depreciation is actually a combination of the SLM as well as the WDV. So it's a combination of the SLM and as well as the WDV method, that is a written down value method of depreciation. Now, how we are going to solve these questions for the same? Let's have a look at the steps for the calculation first of all. First of all, using the straight line method of depreciation, we will be calculating the depreciation percentage. Let's say the case that the useful life of the asset is given to be 10 years. It is given to be 10 years. Useful life is given to be 10 years. What will be the percentage of depreciation as per the SLM? I've already conveyed the idea to you in the first video. So it is 100% divided by 10. That is equal to 10% per annum. Depreciation is to be charged. Now this is a step number one. Second thing, we will be double the depreciation rate. Now this 10% will be equivalent to what? So we calculated the 10% over here. The second thing, 2 multiplied by 10%. 2 multiplied by 10%, that is equal to 20% of the depreciation. Now, we will be using this 20% and then we will be using the WDV method. That is the written down value method of depreciation, and we'll be charging the depreciation accordingly. This is why I told you that this particular method is a combination of the straight line method of depreciation and the written down value of the depreciation. Is that clear? Is that clear? Now let's solve a question based upon it so that it will be much more clearer to you. Now let's consider the question. It simply says, consider a piece of property, plant, equipment that cost rupees 2,50,000 with an estimated use of 8 years and zero salvage value. Calculate the depreciation using the double declining method, right? Now in this scenario, we are provided the useful life of 8 years, right? So it is 100% divided by 8, right? It came out to be 12.5 if I'm not wrong. So it is 12.5 percentage. So the first step was the same, that use the SLM method so as to calculate the percentage. So it is 100 divided by 8. It came out to be 12.5, right? Now the step number 2, double this percentage. So it is 12.5 multiplied by 2, that is equal to 25%. It is equal to 25% now, right? Now we will be using 25 percentage so as to do what? so as to calculate the depreciation, and we have to use the WDV, right? Simple as that. So the amount is given to be PP amount is given to be 2,50,000. So for the first year, the depreciation will be equal to what? 25,000 multiplied by 25%. 2,50,000, not 25,000, 2,50,000 multiplied by 25%. It came out to be depreciation amount for the first year. It will be 62,500. 62,500, and the net book value will be equal to 2,50,000 minus 62500. That is 1,87500. This is your net book value after first year. The second year will be equal to 1,87500 multiplied by 25%. That is equal to what? 46875. This is the depreciation for the second year. 46875. And we are left with a net book value of 1,40,625. And for the third year that I'm going to calculate, the rest you can be calculating on your own basis, right, for the practice purposes. So it is 140,625 multiplied by 25% is equal to what? So 140,625 multiplied by 25%. So it is 35156. So you can be looking at the huge differences between the depreciation amounts, right? Just look at the differences. Now, in the first year, the depreciation was charged 62,500, which is humongous. In the second year, it reduced to directly to 46,875, almost 17,000, right? And then it is 35156 in the third year, and so on. It will reduce. Now, the depreciation over the 8 years, it will reduce and reduce and reduce, but it will never be reducing to zero, because we are using what? We are using kind of WDV, na? That was a limitation of WDV, that the value of the particular asset will never be reduced to zero, right? That's the same case over here, right? Is that clear to you? Okay, so that is about the double declining method of the depreciation. Now let's jump to another important topic, and that is actually related to the change in method of depreciation. It may be the case that at the end of the financial year, we do review the method of depreciation we were previously using, and now we want to change it. And it may be the case that we want to change the method of depreciation in between, right? That may also be the case. And as per the accounting standard 1, it is very much required. It is very much required so as to disclose the accounting policies, the method of depreciation that you were previously using, and how it is going to be impactful on your accounting business over here. You have to showcase each and everything over here. And let me tell you one another important point. This is related to that the method of depreciation that we are going to change, that is going to be on, that can be done without what? That can be changed without retrospective effect, or that can be changed with retrospective effect. Now, what do you meant by retrospective effect? Method of depreciation can be changed without retrospective effect or with the retrospective effect. So when we are talking about without retrospective effect, in that scenario, we are going to change it from now onwards only. So no adjustment entry is to be made in the past entries, and only the future depreciation will be altered, right? That is the scenario. Like if it is without retrospective effect, it means it is not going to alter the previous entries. It is going to alter the upcoming entries only. But when we are talking about the with retrospective effect, in that scenario, it is going to impact the upcoming entries as well as it is going to impact the past entries. And for the past entries, we are to enter a adjustment entry also. Is that clear? Now let's have a look at the question over here. You'll be understanding what I'm trying to say. So a company purchased a machine worth rupees 5 lakh, dated 1/4/2018. Depreciation fixed at 10% at the SLM basis. The company changed the method of depreciation to WDV method on 1st of April 2019, and then sold the machinery for 2 lakh rupees dated 30th of June 2020. What will be the amount of profit and loss? And trust me, only such type of questions are to be asked to you in the exam, right? No simple questions are going to be asked to you in the exam over here, right? But that was very much important so that you have concepts with you so that you can solve such type of questions. So if you have been watching the video so far, you must have been liking the video. So kindly please give this video a thumbs up and also consider subscribing to the channel. It's totally free and definitely you will be getting the valuable content in the coming days also, right? Okay, now let's get back to the question over here. A company purchased the machinery. So the book value is given to be rupees 5 lakh. This is the book value that you are provided with. Rupees 5 lakh it is to be given. It is given over here. And this is dated 1st of April 2018. Now from the 1st of April 2018 till the 31st of March 2019, the straight line method of depreciation was used. Getting it? The straight line method of depreciation was used. And further, the WDV method was used. Okay. And the depreciation was 10% per annum. It means the life of the asset was 100 divided by 10, that is 10 years. So the depreciation for 1 year, it will be charged at 10%. So the depreciation, if we calculate, it is 5 lakh minus 10%, that is 4 lakh 50,000. So we are having the net book value after 1 year to be 4 lakh and 50,000. And the depreciation that was charged was 50,000 under the straight line method of depreciation. Clear? Is that clear? Okay. Now, the company changed the WDV method on the 1st of April 2019 and also particularly they sold the machinery on 30th of June 2020. That particularly there were 1 year and 3 months in between. April, May, June. There were 1 year and 3 months in between when the company basically calculated the depreciation based on the WDV method of the depreciation. Clear? Right? So right now I'm going to write the entries over here. That is from the 1st of April 2019 up to 31st of March 2020. Now we are using what method? We are using the WDV method, written down value method, and we are going to use a reduced value of 4,50,000. So as for the calculation purposes, 4,50,000 and same percentage 10% we are going to use. So the depreciation that was charged was 45,000. For the this particular year, the depreciation which was charged was 45,000 and the net book value will be 4,50,000 minus 45,000. That is equal to 4,05,000. 4,05,000 is the value over here. Now also for the period that is 1st of April 2020 up to the 30th of June 2020. How many months were there? There were 3 months. So if we are to calculate the depreciation for this period, this will be equal to 3 divided by 12 and further multiplied by 4,05,000 4,05,000 multiplied by 10% because that was a reduced value. So 4,05,000 multiplied by 10%, that is 40,500, right? So 40,500 multiplied by 3 divided by 12, multiplied by 3 and divided by 12, that came out to be 10125. So this is the depreciation for the 3 months, right? So 4,05,000 minus 10125, that is 394,875. So this will be the net book value after this particular period. Is that clear? Are these particular points clear to you? Let me just recall the same points for you. So company purchased the machinery at rupees 5 lakh. No salvage value is given. Depreciation percentage is given for 10%. Now I'm going to consider the different accounting periods only, right? That is from 1st of April 2018 to 31st of March 2019. SLM method was used. I used 10% as the depreciation percentage and calculated the net book value, right? For the second period, I considered the another accounting period, that is from 1st of April to 31st of March 2020. Written down value method was used, and accordingly we calculated the value of depreciation, that is 45,000, and the net book value came out to be 4 lakh and 5,000. Then we were having the another 3 months with us, on which the WDV method, that is a written down value method of depreciation, was used, right? But this is just for 3 months, for 1 quarter only, right? So it is 3 divided by 12 into 4 lakh 5,000 into 10 percentage, and we calculated the net book value. It came out to be 394,875. Now, as I told you in the one of the related questions where we had to calculate that there was a profit or loss, I told you if the net book value is more than the selling price, it means we have sold the asset at a loss, right? Now, this is the same scenario. Like we are over here. So now we know that the value, book value, net book value. So this is the net book value that we calculated after the certain period, right? So this particular value is higher than that of the selling price. So it is 394,875, and the price at which we sold the particular asset, it is given to be 2 lakh rupees, right? So this is the amount of loss. So this is the amount of loss that we accumulated, that is 1,94,875, because in the question it is asked that what will be the amount of profit or loss. So it is the amount of loss. Okay, so that is the answer. I hope that this particular point is clear to you, right? Now, again, a very important topic. It's about the replacement of a fixed asset. Now, in the very beginning of the chapter, I told you, like, whatsoever the amount of depreciation is charged, it is a non-cash expense. Nothing is going out. We are just charging a cost to the asset value in the accounting, right? Now, that particular money can be set aside so as to create a pocket, so as to create a fund, which is said to be the sinking fund. Now, what is the concept of sinking fund? Sinking fund is like, let's say case after 5 long years, I want to have a value of rupees 5 lakh. I want to have a value of rupees 5 lakh so that I can be replacing my current asset, right? So that is particularly sinking fund. So whatsoever the amount of depreciation is there, let's say this is the first year, second, third, fourth, and fifth year, right? So whatsoever the depreciation amount I'm charging, let's say case I'm charging rupees 1.25 lakh of the depreciation every year. So I'll be keeping it aside. I'll be keeping aside 1.25 lakh rupees every year, and I'll be investing it at a certain percentage. So whensoever we do deposit a fixed amount at a regular interval, right? So that particularly forms a annuity. That forms an annuity. So annuity is of two types. One, it is related to the ordinary annuity, and the other one, it is related to annuity due. So when we are depositing, or when we are paying, or when we are getting the amount in the beginning of the period, it is related to the annuity due. And when we are basically paying or receiving or getting the amount at the end of the period, it is a ordinary annuity, right? So let's consider that the end of each and every financial year, we are going to deposit such amount in some separate investment plan where we'll be getting a certain percentage of return. Let's say case in this case, we are assuming we are getting 8% of the return. We are getting 8% of return. So I'm keeping aside 1.25 lakh, which is a fixed amount every year, setting aside, right? So this is forming an annuity. This is forming an annuity. And what I want, that after 5 years, I'll be having rupees 5 lakh with me. After 5 years, I'll be having rupees 5 lakh with me. So this is forming what? This is said to be the sinking fund. This is said to be the sinking fund. So organizations may set aside an amount, cash equivalent to whatsoever the depreciation is being charged as an expense on their asset, so that the amount is available, the money is available with them at the end of the useful life of the asset, so that they can be replacing the current asset with the new one, right? So under this particular method, the depreciation fund or sinking fund is actually created. So sinking fund is nothing but it's just the amount of depreciation that you're keeping aside. You will be investing such amount at a good place, right? In a good investment plan, we will be getting a very handsome return, right? And you are basically certain now that you will be getting this particular amount at the end of such period, right? So that is sinking fund. Now let's understand the accounting entries for the same. Now this is very much important. You must be understanding the particular entries also. So whensoever the depreciation is charged, the depreciation account is debited. Why it is debited? Because it's a expense account. So you must be learning the golden rules for the accounts. Now what are the golden rules for the accounts? Debit all the expenses and credit all the gains and incomes. Whatsoever the losses, whatsoever the expenses, you have to debit as per the nominal account rule, right? So the expenses account will be debited, right? And further, so as to asset account, it is to be credited. The asset account is to be credited. Asset account is a real account. All the asset accounts are what? All the asset account are real accounts. So as per the real account golden rule, it says debit what comes in and credit what goes out. So definitely the value of the asset is reducing. So we have to credit that particular account over there, right? So previously, let's say that you purchased a machinery at rupees 5 lakh and now you charge a depreciation of rupees 1 lakh to it. Now the value account will be reducing to 1 lakh rupees. Now it will be reduced to 4 lakh rupees. Previously, if it was booked at 5 lakh rupees, now you charge the depreciation to it, it will be reduced by 1 lakh, right? That is the scenario which is happening over here. And after when you have charged the depreciation to the asset account, now it will be transferred to the profit and loss account. The depreciation will be transferred to the profit and loss account. Now profit and loss account will be debited because profit and loss, it's an expense. Depreciation is an expense. What kind of expense? Non-cash expense. So the profit and loss account will be debited. And further, so as to basically reduce the depreciation account value to be zero, the contra entry will be passed and it will be credited accordingly, right? So that is the scenario. And after the useful life of the particular asset, the value of that particular asset account will be reduced to zero or to the scrap value or the residual value. That is the case, right? So this is the whole scenario with the depreciation and all. And there is a question based upon the same. There's a question based upon the same which we'll be solving right now. Okay. So here is a scenario. On January 1, 2000, Messrs. ABC purchased a plant costing rupees 41,000, spent 4,000 on its erection. Estimated effective life of the plant is given to be 10 years. The scrap value is given to be 5,000 rupees. Advise the depreciated value of the plant at the end of the third year under the straight line method of depreciation. Very much easy question, right? So the particular plant was purchased for 41,000, but this is not the book value. Why? Because another 4,000 rupees were spent on the erection. So the book value will be 45,000. And also the depreciation is not to be charged on 45,000. Why? Because also you are provided with the scrap value and the scrap value is given to be 5,000, right? So the depreciation is to be charged on 40,000. And again, a very good point is given to you that the useful life of the plant is given to be 10 years. So the percentage will be 100% divided by 10. That is 10% of the depreciation is to be charged each and every year uniformly on the book value, right? So into 10%, that is equal to 4,000. So 4,000 of the depreciation is to be charged every year, right? And for the 3 years, how much depreciation will be charged? It will be 4,000 multiplied by 3, that is 12,000 depreciation will be charged for 3 years. For 3 years, 4,000, 12,000 of the depreciation will be charged, right? In the question, they asked us about the depreciated value of the plant. So it will be equal to book value, that is actually equivalent to 45,000. Book value is 45,000, right? Minus the depreciated value, accumulated depreciated value, right? Which we calculated to be 12,000. So 45,000 minus 12,000, that is equal to 33,000. So this is the depreciated value of the plant at the end of the third year under the straight line method of depreciation. So that was actually all about this particular video. I hope that you must have understood the concept and must have learned the concept. So if you liked this particular video, do give this video a thumbs up. Do subscribe to the channel right now. And if you want to get all the videos, all the PDF, just simply do save the number 83609 and we'll be sharing all the details with you. You just need to save the number 83609 and after that, WhatsApp us writing saved for JAIB and we will be posting all the updates to you. Thank you so much and see you again in the next video. Happy learning.